So perfect. We're going to get into this. So what's going on, traders? My name is Mike from CapitalHillFX, and I'm going to be teaching you guys about mastering the art of backtesting your trading system. And this is just going to be a step-by-step guide to how you could effectively test your trading system. Most new and aspiring traders, they don't even realize the importance of backtesting their trading system, how you could derive statistical data. It allows you to build confidence in your trading system. And there's so many different benefits of why it should be important to use it on a day-to-day basis. So we're going to go through the introduction. We're going to go through manual versus automated backtesting, how to perform it, a literal step-by-step guide. And then we're going to wrap it up with important tips. And again, I'm going to be going through a chart and actually backtesting a couple trades just to make sure that we have it down pat of how to backtest your trading system, because I don't want to just go through a PowerPoint presentation and just sort of go through like slides and stuff like that. I actually want to teach you the practical steps of what it takes to become profitable in these markets, and that's by backtesting your trading system. So a lot of influencers, a lot of traders, they'll brush over the concept of backtesting in general. And I want to make sure that we're focusing on very much the backtesting trading system, because that's the only way, one of the best ways to find profitability in the markets. So we're going to start off with the introduction. And again, the introduction is just introducing backtesting. So what is backtesting? Backtesting in Forex is the process of testing a trading strategy using historical price data to determine its effectiveness and profitability. So basically, you're just going back in previous data and simulating trades so that you're not using those trades in live data to risk capital. That's basically it. You're just going back in previous data and seeing if your system works in previous data, so you're not risking your live capital. Why is it important? Backtesting is an important tool for Forex traders because it helps them evaluate the effectiveness of their trading strategies without risking real money. I see new traders almost on a day-to-day basis risking their live capital in the live markets with a system that they've never proven profitability with. That is absolutely insane. You need to be able to prove profitability in previous data before you're ever actually leveraging it in the live markets. So make sure that you're backtesting your trading system on every single currency pair, and make sure you're only trading the currency pairs that work with your trading system in previous data. So it allows traders to identify flaws in their trading strategies and make improvements before implementing them in the live markets. So of course, with any technique or strategy, there's pros and cons, right? So first, we're going to go through the pros, the benefits of backtesting. So this should sort of hype you up for why you want to backtest, right? Number one, improves your trading strategy. So backtesting allows traders to test their trading strategies using historical data, which can help them identify their strengths and weaknesses of their strategy. This is a very big one because a lot of people are always wondering how they could make their strategy that much better. And backtesting is the number one way to actually improve your trading strategy. You could just simulate trades in previous data, and you could tweak things like risk to reward ratio, your risk management, price action, certain market structure. There could be so many different technical cues that you could analyze and do differently to improve your trading system. And there will be so many things like statistical data and probability that will show you that you should use one indicator that opposed to the other, or maybe one technical cue opposed to the other. This is a very big one. Number two, helps reduce emotional bias. This is a very, very big one. And I usually say this in my TikTok lives because a lot of people don't understand the importance of actually implementing a backtesting strategy and how it helps reduce your emotional bias. I always say, make sure you're emotionally detaching from your trades and your trading system. And the best way to do that is emotionally attaching to statistical data, probability, and literal statistics. When traders backtest their strategies, they can remove the emotional component of trading, which can cloud their judgment and lead to poor decision making. This can help traders make more objective and informed trading decisions. This is the best way to find profitability in the markets, is leaning way more into statistical data rather than emotions, hopes, and feelings. I always say it almost every single day on my lives that the markets don't care about your feelings. They don't care about your emotions or hopes. They care about statistical probability and having an edge in the market. And that's what backtesting shows you perfectly. It provides confidence in your trading system. Number 2 and 3 pretty much go hand in hand, right? Because when you have more confidence in your trading system, you don't emotionally attach to your trades as often. So backtesting can give traders confidence in their trading strategies by showing them how the strategy would have performed in previous data. This can help traders trade more confidently and reduce their fear and uncertainty. So I always say, when you see your trades play out over and over and over again. Remember, I usually simulate near 400 to 600 trades before I actually implement that trading strategy in the live markets. If you see your trades play out over 400 to 600 times in previous data, Don't you think that you're going to be a little bit more confident with your trading system? It just makes sense, right? So the more often that you're trading that trading system and you see it hitting take profit, even you see it hit stop loss every now and then, you become way more emotionally tough throughout the whole entire process because you've seen it play out before. So that's why it's very, very important to make sure that you backtest your trading system so that you prove confidence in your trading system. Number 4, trains your eye. This is a very, very big one. So by examining historical price alterations and recurrent patterns, backtesting can help traders in identifying trading opportunities way more efficiently. In other words, it aids in the improvement of traders' technical analysis abilities. The way I like to put this is the more chart time that you get, the more hours you get spending on the charts, the more likely you know how the markets move, the quicker you are going to be able to identify your trading opportunity. And this is a very big one because I see a lot of new traders just looking at a chart for 15, 20 minutes, not sure if they should be placing the trade or not. If you're looking at a market for more than 5 minutes and you're asking yourself, I don't know if I should place a buy or I don't know if I should place a sell, that's giving you a very good idea that you don't even know your trading system. You just don't. So that's why it's very, very good when you're backtesting and doing all of this previous data and going back in historical data that you train your eye for your own trading setup. You will know like the back of your hand if you have a trading setup or not. You should be able to look at the market within the first 15 to 20 seconds, know if it makes sense for you to actually place a trade or not. Because what happens is the more and more that you look at a chart, the more and more likely you are going to place a trade on that market because your brain begins to place like sort of tricks on you in thinking that there's a trading setup that was never apparent in the first place. If you're not identifying significant horizontal levels within the first 15 to 20 seconds of looking at a market, they're probably not that significant. That's what I always tell anybody who ever works with me. Just make sure that you have a good idea if it should be a trading opportunity within the first 30 seconds of looking at the market. Because if it's after 30 seconds to a minute, you're probably just subconsciously playing tricks on yourself thinking that you should be placing a trade when you're not. So it's very important to be able to train your eye for your trading setup so that you know exactly what you should be placing into. Derive statistical data. This is basically what I've been saying the whole time. Backtesting allows traders to evaluate the risk of their strategies by analyzing the winning percentage, risk to reward ratio, and other metrics. And we'll go over these key metrics in the future. And you are going to be leveraging these key metrics in the live market so that you're profitable. And then last but not least, saves time and money. Backtesting allows traders to test their strategies in a simulated environment without risking real money. This is what everyone wants, right? You want to find out if your system works without actually risking your live capital. So that's what backtesting does. So we're going to go into the cons now. It's not just all pros. There's some cons as well. So the negatives of backtesting: historical data limitations. Backtesting relies on historical data, which may not be representative of current market conditions. This is the biggest con of backtesting. Basically, it's just saying that when you test in previous data, it's not simulating current market conditions, meaning maybe we wouldn't have placed some of the trades that we've placed in backtesting data because of huge impact news events, or maybe you wouldn't be awake usually. There's a lot of different reasons why you wouldn't place trades in live markets that you do place trades in backtesting data. So that's why it sort of is very limiting when you're only focusing on historical data. So you definitely have to keep that in mind when you are backtesting. Number 2 is confirmation bias. When you backtest, you're often subconsciously backfitting data or tailoring study parameters to get a good result. So statistical track records could be misleading and don't represent true performance. I always recommend people to try and avoid confirmation bias by sort of covering their eyes when they're going back in previous data and just making sure that they stay true to their trading criteria. If you stay true to your trading criteria, you declare it before you actually start backtesting, and you make sure that you're only executing on those trading criteria, then you will be completely fine and you won't have issues with confirmation bias. And you're making sure you close your eyes when you go back in previous data. You're not looking at significant structures before you actually go back. Like, there's definitely ways to avoid confirmation bias, but this definitely is an issue for a lot of new traders when they start backtesting. Like, they'll place trades just so that they're not wrong. It's completely fine with being wrong in the markets. It's not okay to be wrong and keep that same mistake in the live market. So that's what backtesting is all about. There's no reason to try to cover up your mistakes when you're actually in the backtest. It's almost like cheating on a practice test, right? There's no reason to cheat on a practice test because it's not graded. It doesn't count for anything. It's just about being able to make sure that you correct those mistakes when the live test comes out. Difficult to control all factors. Number 3, backtesting works on the premise that if a strategy was successful previously, then it's likely to be successful again. The problem with that is it's not always possible to control all factors that contribute to a successful system. This is pretty self-explanatory. It's basically just saying we can't predict what the market's going to do in the future just because we know what the past has done. It gives us a better edge in the markets, knowing the past data and if the system works in previous data to predict future data. So that's why I do like backtesting data, but it's of course important to know that it's not going to move exactly how it has previously. So that's number 3. And number 4, it's difficult to include all costs. Any trader will tell you that trading in the live markets is different from applying parameters to past Forex data. There is different costs that are going to be occurred when you are trading live rather than trading backtesting. So there's slippage, your bid and ask price, there's different spreads. Like there are so many different fees and commissions when you're live trading that you won't be able to account for when you're backtesting. So it's just very important to keep this all with a grain of salt and just understand the statistical data that's derived with it rather than understanding the exact costs and all of that. So these are all the negatives of backtesting. So we went through the pros and the cons. Now let's go through manual versus automated trading. And we're going to go through our backtesting. And this is going to be very brief, right? Because I'm going to make sure to go through a chart and show you step by step how I actually backtest my trading system. And we're going to go through like 5 trades just to make sure that you actually understand the premise. So we can see manual versus automated. So manual backtesting involves manually going through historical price data, applying the trading rules and indicators, and analyzing the results. This could be a time-consuming process, but it allows traders to have more control over the testing and can be helpful in gaining a deeper understanding of the market dynamics and trends. So it's basically just you going through the markets on your own and you manually placing every single trade. And that's what I'm going to be showing you an example of today. That's the only way that I trade, or the only way I backtest is by manually backtesting, and I manually trade as well. If you automate your backtesting, it doesn't allow you to train your eye for your trading setup. It's much more difficult to gain confidence in your trading system because you're only leaning on statistical data. You don't see it play out with your own eyes. It's hard for you to improve your trading system. Like I highly, highly, highly recommend you taking the time to actually backtest your trading system manually rather than using an automated software. So we could see going into automated. Automated backtesting involves using software to automatically test a trading strategy using historical data. So the software applies the trading rules and indicators to data, which generates buy and sell signals and calculates the resulting profits and losses. So it pretty much does everything for you. You basically just tell the automated software what your trading system is, and it does everything else from there. The reason I don't like this is, like I said, it doesn't allow you to actually get the reps in. It doesn't allow you to actually physically place that trade. So it's definitely way more beneficial, in my subjective opinion, to manually backtest, just because you will get so many more invaluable assets from backtesting your trading system manually rather than automated. So highly, highly recommend. Don't spend any money on automated backtesting software. You could spend a fortune. There's some softwares out there that cost like hundreds of thousands of dollars to backtest your trading system when you could do it for literally like $10 a month on TradingView. Like it just makes no sense to use an automated software unless you're looking for that get rich quick. And if you're looking for get rich quick, Forex is not it. We all know that. So we're going to go on to the next slide, which is how to perform it. This is the main thing right here. How to perform the backtesting. Okay, you've told me how good it is. Now, how the hell do I perform it? Well, first things first, you need to clearly identify your trading parameters. This is a very big one because a lot of people, what they don't do is clearly identify their trading parameters. Maybe you're asking yourself right now, what are my trading parameters? And we're going to make sure to outline this when we go into the live example in the charts. Next, choose the market. Choose the market that you're going to be backtesting. Is it going to be indices? Is it going to be commodities? Is it going to be Forex? Is it going to be cryptocurrency? Make sure to choose the market. Number 3, go back in previous data. So again, we will be able to show this a little bit better when we go back in previous data on TradingView, but it's actually going back using the replay tool in TradingView and going back in previous data. Number 4, analyze chart and begin looking for trades. So this is when you're going to start clicking through the candles and actually placing your trades. After that, you're going to journal the key metrics. And what are the key metrics? Key metrics. Number 1, you want to track your winning percentage. That's probably the biggest one right there. What is the winning percentage on that currency pair? Like literally as simple as that. Are you profitable or are you not? Number 2, net return. This is your P&L, right? Going back to, are you profitable or are you not? Number 3, winning streak and losing streak. This is very important to get a better idea or a reference of when you're trading the live markets. of how often or how long your winning streaks and losing streaks are. So for example, if you lost 2 or 3 trades, I know some traders out there that if they lost 3 trades in a row, they would like go freak out and they would probably stop trading. If you lose 3 trades in a row in backtesting data and you document it, but you see that you're profitable over an extended period of time, then there's no reason to stress out. There's no reason to get worried because you have the statistical data proving that, okay, I went on a losing streak, but over the extended period of time, I was still profitable. So there's no reason to emotionally trade or revenge trade or over leverage your account just because you lost 2 or 3 trades. It's all part of the process. The only thing guaranteed in these markets are losses. So it's just important to be able to deal with the losses. And if you're able to track how often your losing streaks are or how long they are, then you could get a better reference or contextual data of working through them and trading through them. And then number 4, rate the market's performance. I usually like to do this on a 0 to 5 star rating. So what I sort of mean by this is if you're trading Euro USD and you find that the market is working really well with your trading system, like the market structure, the price action, the overall flow of the market flows really well and you're predicting it really well, then rate it like a 4 or 5 stars. But if you see that the price is just swaying everywhere, and even though you're profitable on the system or on the currency pair, even though you're profitable, it's still very choppy and shady. I would highly recommend you sort of rating it much lower on the scale. And you'll sort of know what I mean once you actually get into backtesting data, because there are going to be those pairs that are just nightmares to trade. And we've all been there. Like there's just been pairs that are so difficult to trade and you just want to sort of scream because of them. But it's very important to just rate the performance. So now we're going to go with the last, which is important tips. So top 3 backtesting tips that I could advise you. Number 1, determine your style. Backtesting is all about replicating your trading style. Make sure you backtest your system in a way that makes sense and allows you to gain expertise. So make sure you're starting off by picking out what type of trading style are you going to adapt. Are you going to be a scalper? Are you going to be a swing trader, a day trader, a position trader? What type of trader are you going to? What type of trading style are you going to adapt? Number 2, take your time. This is very, very important because a lot of people like to rush throughout the whole entire process, or they may like to take too much time. So let's go into this. Backtesting is a learning process. Your backtesting sessions should be broken up into smaller chunks so you can conduct them consistently. I always say backtest 1 pair a day. That's just the easiest way to find consistent gains in the market. 1 pair a day, 20 trades. I think that is very, very logical and practical for new and aspiring traders. Try to keep your sessions short, under 2 hours, so your approach each session is fresh and you don't get lazy. After you start backtesting after 2 hours, I found that I got way more sloppy with actually testing and my whole entire technique. So it's very important to make sure that you condense your sessions to less than 2 hours, because if it's way more than 2 hours, then you're just going to be being way more sloppy and just placing trades just because. So make sure you're not getting lazy and you're keeping your sessions under 2 hours. And then number 3, mistakes are part of the process. Make sure you understand that mistakes are just part of the process. Making mistakes is part of learning. We're naturally inclined to avoid mistakes, but if a trading mistake pops up several times, it's tempting to change the trading system to account for it. Sadly, this leads to too many variables in a trading system. So just make sure you're sticking with your actual criteria and getting real data, because if you're constantly changing your system just to make sure that the trade ends up playing out, you're not going to have data that you could rely on and leverage in the live markets. So that is the presentation portion of the seminar. Do we have any questions, concerns, comments before we actually get into the charts? Because I want to be able to go into the charts and show you exactly how to backtest a trading system, because I think it'll be very valuable for not a lot of new and aspiring traders. So Angel goes, can I backtest 2 strategies at a time, like trend lines and support and resistance? That's a very good question. So it's very important to understand that when you're incorporating a bunch of different nuances and trying to adapt them into a trading system, you want to be able to only identify one trading system. Only backtest one trading system when you are performing backtesting. Because if you backtest a bunch of different strategies at the same time, you are going to be very, overwhelmed with all the different nuances that you're going to have to make trading decisions on. And B, it's going to be very confusing which metrics correlate with which trading system. So I highly recommend you only testing one strategy at a time, because it's going to be very confusing trying to trade bounces off of daily horizontal levels. And then you're trying to trade off of trend lines. And then you're trying to trade off of moving averages. And then you're trying to make sure you're only for one session, you're only trading one strategy. That's very, very important. We're going to go into GBP JPY. So this is the currency pair that we are going to be backtesting. What I like to do, there's a couple different ways that you could start off by backtesting. The first thing I want to do is collapse this right here. So there's a couple different ways that you could go back in previous data. My personal favorite is going really close into the candles, and this is to avoid confirmation bias, right? That's exactly what we want to do. We want to avoid confirmation bias and not see anything when we're reversing. So go really close into the candles. And then what we're going to do is we're going to go, actually I should have did this on the daily time frame. Let's go back to the daily time frame. So we're on the daily time frame. We're going to go really close to the candles, and then we're going to go to the hourly time frame. And you see how the scale is all messed up? That's completely fine. We're going to go back in previous data now. So now we're scrolling back into previous data, and we're just going to test the system. That's basically it. I'm just going to do this for a minute or two. Let me go to the 4-hour time frame. And we'll stop here. Perfect. We got the replay tool, so we're going to replay back to right here. Perfect. So now we're going to go back to the daily time frame, if I could. Perfect. And now we're back in the beginning of this year. You know what? I want to go back a little bit earlier. I apologize for all the confusion. I like to go back usually like 3 months of data, because 1 month is just not really enough data. I feel like you need to have at least 3 to 4 months of data. So let me make sure that I'm going back significantly. We'll go back to November. The beginning of November seems pretty good. Perfect. So we'll go right here. Cool. Okay, so we're going to start off on the daily time frame. So the first thing we need to do is identify our trading criteria. So what is our trading criteria? So number one, and I'm going to just put this in text so that we clearly have it. Bounces off of daily horizontal levels. That's all we're going to be looking for. Again, this is my trading system. Make sure that you're implementing your own trading system. But we're just going to identify significant horizontal levels. So on the daily time frame, identify significant levels. And then once on the hourly time frame, so we're doing this on the daily 12-hour. Again, every single person needs to do this before they start backtesting. Identify what your trading criteria is. On the daily time frame, we're going to identify significant horizontal levels. And then on the hourly time frame, because that's my execution time frame, what's your execution time frame? Is it the 30-minute? Is it the 15-minute? Is it the 5-minute? Get a better idea of your trading type and the type of and how your trading criteria is going to work with your tendencies and habits. We can see I'm going to be executing on the hourly time frame. So on the hourly time frame, I'm going to identify bullish or bearish price action around these major levels. That's it. Once we actually show bullish or bearish price action around these horizontal levels, that's when I'm going to be placing my entry, okay? And I'm not going to get too in-depth with the criteria just because we'll be here for hours. But basically, I'm just going to be spotting significant bullish or bearish price action around daily horizontal levels. So we have pretty much the whole entire thing set. We're on the daily time frame. And of course, we're going to lose some trades. We're going to win some trades. We're just going to have a good time and see how we could start backtesting a trading system. That's really all that matters. So on the daily time frame, we're just going to start identifying significant horizontal levels. And how I start marking up my zones, for those of you that follow me very closely, know the 3 pieces of criteria that I utilize. I look how many times price is rejected away from the zone. The more times that we've rejected away from the zone, the more significant that we are going to reject away from that zone in the future. How recent has trading taken place around the zone? We want to make sure that trading has taken place relatively recently around the zone so that it's more significant. And last but definitely not least, one of the most important is clear intent with direction. How clear is the intent with direction around this zone? So I like this zone right here. I also like this daily support zone down in here. And I like this other zone up in here. I'm not sure exactly where this zone is. I'm not sure exactly where this zone is, if it's here, if it's here. So just for right now, we'll just place it right there. And then we'll go down to the 12-hour time frame just to make sure that the zones that we've outlined actually are significant. So, I mean, these look pretty good. So basically what's going to happen is if price comes up to this significant horizontal level, I'll be looking for sells. If we come down to this significant horizontal level, we'll be looking for buys. It's that simple. Now we're going to go down to the hourly time frame and do it. Someone goes, how about a year of data? Yeah, a year of data is good. That's completely fine. Just remember, the farther you go back, the more likely you're not going to be able to scope down to these smaller time frames. So I think you could only go back like 3-4 months before you're not allowed to go into the hourly time frame. So if you're a scalper, if you're trying to backtest your scalping system, you're not going to be able to go back like 3-4 months because you'll be executing on the 3-5 minute time frame. So make sure that you're going back in previous data until it lets you actually test that data. Because there's no way I would be able to go back a year and then go on to the hourly time frame. It just wouldn't let me. So make sure you understand that. So now we're just going to play out the candles. Remember what I said. I'm just waiting for price to come up to one of these significant horizontal levels and show some type of price action. And we may lose some trades. We may win some trades. We're just sort of documenting the whole entire process. So I'm going to press play and just see if any one of these, if we hit into any one of these levels. So right off the bat. Oh, okay. Sorry about that. I apologize, but my computer went a little too quick there. So we could see we pushed into this significant horizontal level. We printed a very bottom heavy wick, and then we proceed with a nice bullish candle. I would have waited for another push into the zone because we like multiple rejections away from the zone before looking for potential upside movement. We didn't get that. We're going to go back to the daily time frame. I'm going to avoid that from happening again just because it seemed like we just completely went through the zone without me stopping it, but it just lagged. I'm going to be waiting for a break and retest of this significant horizontal level. We could see we treated this level as resistance and support in the past. I'm going to wait to see if price could come back and test this as potential resistance and then look for potential downside movement. But again, if we just drop towards the downside, then I'll be looking for a bounce off of that significant horizontal level. So just waiting for a pullback to this significant support resistance level and then waiting for that bearish price action because it is around a significant daily resistance level. I'm not going to press play because I feel like play is a dangerous game. Okay, so now we've come back into this significant resistance level. Now I'll be waiting for the price action confirming that we're going to respect here as resistance. So we came back, tested the previous highs, left a nice top heavy wick. And then we led with a nice bear. Oh, nope. See, we almost closed bearish. This is why you wait for candle closures because we could easily have a bearish engulfing turn into a bullish hammer like very quickly. And that's exactly what happened. We almost had a bearish engulfing, but then it turned into a bullish hammer. And then right there is our nice bearish candle. I would probably enter right on this candle. So let's enter. We had a nice candle, clear intent with direction. We're going to put the stop loss right above these previous highs at 100 pips. And then we'll just target something very simple, like these previous lows, just targeting a structural low to start it off, right? And that's something we'll do. Maybe we'll win, maybe we'll lose. Who cares? It doesn't matter. As long as we're tracking it, it doesn't really matter. But we could see overall our time frame, it looks like we're creating lower highs and lower lows. We just came back, broke and retested this significant horizontal level. Just going to go to the 4-hour time frame. Looks like we came back, broke and retested this zone. Just a super clear trade. Let's see if it ends up playing out. So it looks like we're having issues. Actually, now we're sort of screwed, but we could tell if we were actively managing this trade, it would seem a little sketchy because we could see, we could just put it as a stop out, but we could see that we put in a higher low once we actually had this first impulse towards the downside. I always get a little sketched out whenever price makes a first impulse off of the significant horizontal level, and then we put in a new higher low from the preceding trend. It's a little sketchier that price is going to end up making an impulse towards the downside rather than actually continuing back in the initial trend that it was going in. So actively managing it, you probably could have been able to exit here at break even right around this point, but it's much easier to say that now that we've seen it play out. So we'll just put this as a -1 as we stopped out. We weren't managing this trade, and let's just say that we were just completely negligent and we ended up getting stopped out. So we would put -1R, and a lot of people may ask, what the hell is an R? An R is the unit of reward. So if you were risking 2% on this account balance, you would be down 2%, but we're not monitoring how much you're risking. We're just monitoring the unit of reward. So again, just 1R, we're down. We're just going to go on to the next trading opportunity. I'm going to go on the daily time frame and sort of see how price action looks on the daily time frame. We can see we're still floating around this zone. So I'm definitely going to still be looking for potential sells around the significant horizontal level. A lot of people know what a liquidity spike is, stop hunt, whatever it may be. We may be showing something like that. So we can see we just printed a very beautiful bearish candle around the significant horizontal level. I'm not going to be placing a sell just because I've already placed a sell around the significant horizontal level. Even if we drop towards the downside, who cares? I'm not going to be looking for anything. I'm going to look for a more clear breakout in either direction. So we can see we headed back towards the upside. I'm going back to the daily time frame. I'm only going to do a couple more trades just because I don't want to keep this backtesting session too long. I like this level as well. take a look at this significant daily level. We can see we treated it as resistance in the past, also support. We can see we wiped through it a couple times, but I mean, for the most part, we still have been treating this as resistance. I'm going to see how price interacts with this zone when we actually come to it. Yeah, this looks like a pretty good zone. So I'm going to wait to see what happens if we come up to this significant resistance level. And again, a lot of people try to not make mistakes in backtesting data. That's not what we're doing here. I don't know why it's not stopping. There we go. That's not what we're trying to do here. We're just literally trying to gain statistical data around the trading system. So on the hourly time frame, we're scoping back. We could see that we have treated this as support and resistance in the past. So we're just seeing if we could potentially bounce here as resistance yet again. Again, we're going to go back to the hourly time frame right here, and we're going to see what the price action shows us. Printed a top heavy wick, small little bear candle, another small bear candle. Let's see if we could come back and test the previous highs. That's a nice bear candle, but let's see if we could come back and test. Still waiting. Wow, that was nice. Okay, so we're going to enter a sell right here. This was a nice. Do you see all the wicks in the candle closures? Like, it's just showing that we could potentially bounce here as resistance, and we may not end up bouncing. Who knows? But I'm definitely going to try it. So 70 pips. Again, I'm going to go back on the 4-hour time frame just to make sure that we have this valid zone. Yeah, this looks like a pretty valid zone. Yeah, so we're going to stay here. And then we'll do a 1 to 1.5 because that's what we had before. Okay, let's see what ends up playing out. And most of these, I'm not even going to actively manage, like trade manage, just for the sake of this example, I'm just going to let them go. Okay, so here's another stop out. So this is -1 as well. But do you see the importance of actually backtesting this? Because if you did this live, you would have lost 2 trades in a row. And you would say to yourself, oh my gosh, I'm doing terribly, right? But you're not risking any money when you're doing this. You're able to tweak your system and say to yourself, okay, maybe I should have waited for another test of those previous highs, sort of like I mentioned that I should have. It's very important to be able to gather this data and collect this data so that you could properly plan for the future. Next thing I'm going to be looking for is a bounce into this significant resistance level. Let's get rid of this level, and I'm going to wait for a bounce into that significant resistance level. I'm going to go on the higher time frames because we're sort of floating through substructure right now. Okay, so now we're coming back. Hold on a second. So now we're coming back to the significant daily support zone, and we're going to see if price could bounce at this significant support zone. So we've treated it as support in the past. We could potentially treat it here again as support in the future. So I'm going to wait to see bullish price action around this significant horizontal level. Just waiting for a couple bullish candle closures or bullish wicks showing us that we could potentially bounce here. So we can see we already are beginning to bounce, but I need a little bit more validation that we're going to bounce here. Maybe multiple rejections away from the zone. We can see we're printing a lot of bullish wicks. So bottom heavy wicks are beginning to form. And now it's a nice, beautiful bullish candle, but it's not something that I would enter on. Top heavy wick away from the zone. Okay, wait a second. I apologize for going way too soon. I know it's easy for me to say it now, but look at these bottom heavy wicks here. I went way too quick on this one. This would definitely be something that I would be entering on, because we could see that we have a lot of bottom heavy wicks. The position of the body is near the top of the candle. This is everything that I preach sort of when analyzing price action. When you are around daily significant support zones, you want to see bullish wicks in the position of the real body closing near the top of the candle and a very strong real body. We could see right here that we have the position of the real body near the top of the candle. Not a very strong real body, but we do have a very strong bullish wick. And again, we're around a significant daily support zone. So what I'm going to do is I'm going to be placing a buy around the closure of this real body. I'm going to put the stop loss below where we've rejected previously. So around 75 pips. We'll call it 70 pips. Around 70 pips. And then we will target this previous high right here. Perfect. And then this would hit take profit within a couple of candles. Okay, so now we have 2 stop outs, and then we had 1 winner right here. So now we would do plus 1.25 R. Now we're going to keep going. So 3 trades, 2 lost, 1 won. So now we're going to keep going. Let's go back to the daily 12-hour time frame. I'm going to wait for either one of these support or resistance levels to get bounced off of. Just because these seem like super clear zones. in my subjective opinion. These seem like super clear zones. Okay, so we dug deeper into this zone. It looks like we're showing a lot of bullish price action. Let's go back to the 4-hour time frame, just take a look at the market structure. So what ended up happening here? It looks like the market structure, when we analyze it, we're putting in lower highs and lower lows, and we just bounced off of this horizontal level and put in a lower high. And it looks like we bounced again and tried to wipe out the previous highs, but we failed and we came back to test the zone yet again. This is giving me a good idea that we could potentially break through this zone. I'm not going to be trading another bounce off of it. I need a little bit more convincing price action that we're going to bounce here. Yeah, that's what I thought. I thought we would end up breaking through the zone, and we end up doing it. Let's see if we get a break and retest. Let me go back to the 4-hour time frame just to make sure that it makes sense. Yeah, we broke through this zone fully. Now we could come back and retest it as potential resistance. Let's take a look at the hourly time frame. I'm going to see if we could spot some bearish price action on the hourly time frame. Okay, so this is an initial push away. I would like to see multiple rejections away. We could potentially enter here and it could go towards the downside. I like to see multiple rejections away from the zone. So we came back, tested the zone yet again. Here's gives us a better idea if we're going to bounce or break. So we broke through the zone. Yep. So perfect. That actually avoided a stop out right there. You see, I was very skeptical of placing a sell right here because I wanted to see multiple rejections. I wanted to see price come back up to towards the previous highs and begin to reject away. We didn't end up doing that, so there was no trade. That's why backtesting is phenomenal, because you're able to read the price action way more objectively than when you're trading the live markets and you don't even know what you're reading. So that's why it's very important to be able to read the price action when you're backtesting. We're constantly swaying through this zone here as support and resistance. It's going to be very interesting to see the price action that plays out around the zone once we come back to it again next. So I'm just fast forwarding the candles here. We may have to go back to the 12-hour time frame. Again, I'm just waiting for price to come to one of these zones. It looks like we could come up to that significant resistance level. Okay, we bounced into this support zone. Let's go back to the hourly time frame to see if we would have been able to catch an entry. We gapped into this support zone. That rarely ever happens. Wow, we had a very strong bearish impulse towards the downside. Let's go back to the daily time frame. I'm going to wrap it up with one more trade, just one more trade, just because these trades are taking a while. We can see we're digging deep into this daily support zone. This is very, very interesting. And on the daily time frame, we're left with a nice little wick on the bottom half of it. Let's go down to the hourly time frame. I like how this looks. We'll go back to the 12-hour. You see how I'm constantly going back between the 12-hour, daily, and the hour? I'm switching through these time frames just to see how the candles are closing past the zone or right before the zone. And we can see on the 12-hour time frame, we're left with a nice little doji. And this 12-hour candle is actually closing way deeper into the zone. So it's giving us better indication that we're closing right around the zone and that we could use that to our advantage when we're trying to trade a bounce off of it. So I'm just waiting for some type of bullish price action to form around the zone. Doesn't look like we're forming a lot, but I will wait for something. I mean, that's a nice little bullish impulsive candle. What I'm going to be waiting for now is another test of the zone. If we fail to wipe out these previous lows, it'll be very interesting. Coming down towards the lows. Looks like we're leaving wicks. Sorry, just playing candle by candle here. I don't want to miss the entry. See, now we're digging a little bit lower. I don't think this is going to end up spiking like I thought it would. Oh, here we go. Let me go back to the 12-hour time frame just to make sure that we're still staying consistent with this zone. And I would say, let me do more recent. I would still say we could be respecting this zone. Yeah, we still could bounce here. Let's go back to the hourly time frame. Let's spot some bullish wicks or bullish candle closures. Let's do it. Okay, I'm going to place a buy right here. We've had multiple rejections around the significant horizontal level. We have this nice little bullish impulsive candle. Let's just do it. Good. Stop loss right below the previous lows. We'll do it below these previous lows, 115. And we'll do the take profit at 1 to 1.5. Let's see if we can end up bouncing here. If we can't, we'll just wrap it up here. No big deal. We're going to wrap it up here regardless. this looks like. Looks like we're having a difficult time wiping out the highs. Let's see if we could wipe out these highs. There we go. There we go. So this would have hit take profit. So right off the bat, we've lost our first 2 trades. Then the next 2 trades we won. So this is what I'm trying to say. Is a lot of people get very, very discouraged when they lose their first trade, so they'll stop trading. But do you see how the next two trades were profitable? So right off the bat, off of these 4 trades, if we really wanted to, we could place another. But plus 1.25 off of this trade and plus 1.5 off of this trade. What is that? 2.75? 2.75 R. And then minus this 2R. We were left with what? 0.75 R off of 4 trades. So this is if it was a 50% win rate. So we placed 2 out of 4 trades. That is 50%. We would have yielded plus 0.75 R. So this means if we were risking 1% per trade, we would make 0.75% off of these 4 trades. Simple as that. We had a 2 trade lose streak and a 2 trade win streak. What would we rate this performance? Personally, in my opinion, I would rate this a 3 out of 5 stars. And again, you want to be doing around 20 trades per market. I only did 4 trades in this backtesting data, and that was mostly because I was talking out all of the analysis. But you want to be able to literally do 20 trades to have an effective data set to backtest your trading system. So this is it. Out of these 4 trades, we were 50% accurate. There was a 50% chance that we were going to hit take profit or stop loss, right? But again, it's only 4 trades. So the more trades that you actually incorporate into your backtesting data, the more significant that data will be in the live markets and in the future markets. We would have yielded 0.75 R. So pretty much, like I said, if we were risking 1%, we would have yielded 0.75%. This would be our winning streak and losing streak. Again, if you're placing more trades, it's more likely that you're going to have a higher winning streak or a higher losing streak, just to give you realistic expectations in the future. And then last but not least, rating the performance of the market. So that is how you effectively backtest your trading system. If there's anything else that you need, please personally message me. I don't mind. Make sure you already know the best way to access me is through the Discord server. So just personally message me. And if you have any questions, concerns, comments about anything backtesting, anything Forex in general, make sure to personal message me and book that one-on-one call with me. That's completely free, just so that you get a better idea of how you can make logical steps into your trading journey.